Welcome back, everybody, for another deep dive. This time, we're going all the way to $100,000 Bitcoin. It's a pretty crazy milestone when you consider where it all began with pizzas.
Oh, yeah, definitely. I mean, the story of Laszlo Hanyecz back in 2010, buying those pizzas with 10,000 Bitcoin.
It's practically legend now.
I know, right?
Worth about $40 at the time. Today, we're talking a cool billion.
$1 billion. It just goes to show you, the kind of growth Bitcoin has seen. It started with these, almost whimsical transactions, and now it's a major player in global finance.
It's really mind-blowing when you think about it. Bitcoin's market cap, it's now bigger than giants like MasterCard, JP Chase, $2 trillion. So how did we get here? How did this hobbyist project, as some people called it, become such a force?
Well, initially, the vision for Bitcoin was to create a decentralized digital currency. A way to move money outside the control of those traditional financial institutions.
So basically cut out the banks as the middleman. That's a pretty radical idea.
It was, and still is in a way. This idea of decentralization is really at the core of Bitcoin. And then you got the fixed supply. 21 million coins, that's it. That's a big part of why people see it as a potential store of value, kind of like gold.
But this journey to $100,000, it hasn't been a straight shot to the top. We've seen some pretty big swings in Bitcoin's value over the years.
Oh, absolutely. Remember back in the day when you had big names like Jamie Dimon, the CEO of JP Chase?
Oh, yeah?
He called Bitcoin a fraud. Even former President Trump labeled it a scam at one point.
It's crazy how different those early reactions were compared to what we're seeing now. Now you've got institutional investors moving into Bitcoin. What do you think caused that shift?
I think it's a few things. First, you've got to hand it to Bitcoin. It's proven to be incredibly resilient. Crashes, controversies, it's weathered them all. And the technology itself, the blockchain, it's secure, it's reliable. And as the price kept climbing, well, it became harder for those big financial players to just ignore it.
So it's like Bitcoin forced its way into legitimacy. It defied those early critics.
You could say that, yeah. The SEC approving Bitcoin-linked ETFs. That was another big catalyst. It suddenly became much easier for institutional investors to get in on the action. And that brought a certain level of legitimacy to the market. It made it more stable. And of course, that attracts even more investors.
And then there's a whole Trump effect we were talking about earlier. It's funny, in a way, a system that's designed to bypass government control ends up benefiting from a politician's embrace.
It does make you think, doesn't it?
Yeah.
About what decentralization really means when a political figure can still have such an impact on even these unconventional financial systems. And then you've got Trump, who once called it a scam. Now he's a self-proclaimed Bitcoin enthusiast.
Yeah.
And his family is launching their own crypto venture, World Liberty Financial. It just adds another layer of complexity to the whole story.
Definitely makes you wonder if that perceived endorsement played a role in that recent price surge. But let's back up a bit and talk about Bitcoin's wild ride. That 2021 surge, almost hitting $70,000. Everyone was talking about Bitcoin. Celebrities were endorsing it left and right. Was that a sign that it had finally gone mainstream?
Oh, there was definitely that FOMO feeling in the air.
Yeah.
Fear of missing out. It drove a lot of people to invest. But then, boom, 2022 crash, triggered in part by that whole FTX collapse. People lost fortunes, and suddenly regulators were taking Bitcoin very, very seriously.
That crash was a wake-up call. It reminded everyone just how volatile Bitcoin can be, even with more and more institutions getting involved. It raised a lot of questions about regulation, whether there needed to be more oversight.
Absolutely. Volatility is still a concern, but we are seeing some positive moves on the regulatory front. Gary Gensler, the SEC chair, he was pretty skeptical of cryptocurrencies. Well, he resigned. And Paul Atkins, who's seen as much more favorable to the industry, he's been appointed as the new head of the SEC. That could mean a more, shall we say, accommodative regulatory environment.
Interesting. So it seems Bitcoin is at a crossroads. You've got institutional investors coming in, bringing stability and potentially wider adoption. But then you've got these ongoing questions about regulation, volatility, and of course, the environmental impact of Bitcoin mining.
You've hit the nail on the head. Those are the key issues that are going to shape Bitcoin's future.
And that's what we're going to delve deeper into after a quick.
Actually, before we move on, I think it's worth taking a closer look at that point you made about institutional investors. Their involvement, it's pretty significant for Bitcoin's future. And it's not just about them bringing more money into the market, it's about us. It's about a shift in perception. When you have big players like BlackRock and Fidelity offering Bitcoin ETFs, it tells the whole market that Bitcoin is maturing. It's not just some risky bet anymore.
So it's like the traditional financial world is finally giving Bitcoin its stamp of approval, which is kind of ironic considering Bitcoin was supposed to disrupt that very system.
Right. It's funny how things turn out. But yeah, this institutional buy-in has a few big implications. First, you have more liquidity in the market,
Right.
easier to buy and sell. Second, it attracts a different kind of investor, more sophisticated, looking for long-term growth. And third, it puts pressure on regulators to come up with clearer rules for the whole crypto industry.
Makes sense. The more institutional money flows into Bitcoin, the more seriously regulators have to take it.
Exactly. And that clarity from regulators could lead to even wider adoption. Imagine a world where you're using Bitcoin for everyday stuff,
Yeah.
buying groceries, paying bills, you name it.
That's a world I'd like to see. But we're not quite there yet. You mentioned earlier that there are still some big challenges ahead for Bitcoin. One that keeps coming up is that energy consumption. Mining Bitcoin takes a ton of electricity. What are your thoughts on the environmental impact?
It's a valid concern, no doubt about it. Bitcoin mining uses a process called proof of work. It takes a massive amount of computing power. But the Bitcoin community, they're not just ignoring this problem, they're actively looking for sustainable solutions.
Or like what kind of solutions are we talking about?
Well, for one, there's a big push to use renewable energy for mining. You've got a lot of mining operations already running on solar, wind, hydroelectricity.
So a greener Bitcoin is possible.
Definitely possible. And there's research into other ways to verify transactions, ones that aren't so energy intensive. Proof of stake is one. It requires a lot less computing power. Ethereum, the second biggest cryptocurrency, they switched over to proof of stake recently. A lot of people think Bitcoin could follow suit eventually.
That would be a big step in the right direction. But even with these efforts, some critics say Bitcoin just isn't sustainable, period. They say mining new coins will always require a ton of energy.
That's true. The fixed supply means mining will always be necessary. But technology keeps advancing, right? We might find even better ways to mine Bitcoin or manage that energy consumption. It's a challenge for sure, but the Bitcoin community is taking it seriously.
It sounds like it's about finding that balance between technological progress and, being responsible towards the environment.
Exactly. And it's an ongoing discussion. But, another concern that gets brought up a lot is Bitcoin's use in, well, illicit activities, ransomware attacks, money laundering. How big of a problem is that really?
That's a good question.
It's true that early on, Bitcoin was attractive to some criminals because of its anonymity. But that's changing. Law enforcement is getting better at tracking Bitcoin transactions. And the blockchain itself is actually quite transparent. It's easier to trace the flow of funds compared to, say, traditional cash.
So while Bitcoin might have been a bit of a haven for illegal activities in its early days, that's not really the case anymore.
That's the trend we're seeing. The data shows Bitcoin use in things like ransomware attacks is actually going down. Partly because law enforcement is getting better, but also because criminals are realizing that Bitcoin's traceability makes it risky for them.
That's good to hear. So we've talked about the environmental impact, and we've touched on the issue of criminal activity. But let's step back and talk about how this whole idea of a decentralized digital currency even came about in the first place.
To really understand that, you have to go back to 2008, the global financial crisis. Think about it. Banks collapsing, people losing trust in the whole financial system. There was a lot of uncertainty, a lot of disillusionment. And that's when this mysterious figure, Satoshi Nakamoto, published a white paper outlining this revolutionary concept, Bitcoin.
So Bitcoin was born out of a crisis of faith in the traditional financial system.
Exactly. The timing is key. People were looking for alternatives, for a way to control their own finances, escape what they saw as a corrupt and unstable system.
And Satoshi Nakamoto's vision was this decentralized system, free from the control of governments and banks, transactions happening directly between individuals, secure, transparent, all recorded on this new technology called the blockchain.
You got it. The blockchain was the backbone of this vision, a way to build trust into the system. Every transaction, verifiable, tamper-proof. It was a radical idea, no doubt, but it really resonated with people who were fed up with the status quo.
It's amazing to see how something that was once seen as fringe, even dangerous, is now being embraced by the very institutions it was meant to disrupt. It says a lot about the power of innovation, how quickly things change in the world of finance.
Absolutely. And that brings us back to the question of Bitcoin's future. Now that we've hit this $100,000 mark, where do we go from here?
That's the question everyone's asking, right? The $1 million, I guess, $100,000 question. What's going to shape Bitcoin's path in the years to come?
Well, one big factor is regulation. It's still evolving. We need clearer guidelines, frameworks, to encourage wider adoption and innovation.
It almost feels like governments are constantly playing catch-up with this rapidly changing technology.
Yeah, that's a good way to put it.
Mm.
And this regulatory uncertainty, it creates both challenges and opportunities for Bitcoin.
Mm.
Some investors might be hesitant because they want stability, predictability, but it also leaves room for experimentation, for pushing the boundaries of what's possible with blockchain technology.
So it's a tightrope walk, finding that sweet spot where regulation encourages innovation without stifling it. What about technological advancements? Are we going to see improvements to the blockchain that make Bitcoin more scalable, more secure, less energy intensive?
Oh, without a doubt, the blockchain is constantly evolving. We're seeing innovations like Layer 2 solutions, which can speed up transactions and lower costs.
Mhm.
There are advancements in privacy and security, too.
And as we discussed earlier, there's the move towards sustainable mining and those alternative consensus mechanisms like proof of stake. Those could really help address those environmental concerns surrounding Bitcoin.
Exactly.